Chris, thank you for putting this together. It's just great to be out. And I'm safe to be around. I've already had COVID. I have tiger blood. And for me, all it was for me is I got really tired. But this is how tired I was. I was the tired that you feel when right after Thanksgiving, someone suggests you should help with the dishes. I mean, I was really beat. So I'm going to tell you just a little bit about each sector and maybe an opportunity in each sector. Do you guys want to know the truth?
Yeah.
Yes. Really?
Yes.
Yeah.
Because sometimes the truth can get you in trouble, right? Did you hear about the guy he was trying to get a job and he's at the interview and the lady said, look, tell us about your best trade. No, not your best one. Tell us about your worst trade. Your worst trade. He says, well, I'm really honest with people, really honest. She says, that's not a bad trade. He goes, I don't give a damn what you think. so I'll be honest with you then, if you want it. So I'm going to start with the sectors that are really doing well and then go to the ones that are doing worse and kind of slow down in the middle because those I think are the most interesting. Well, first industrial, everybody knows it's doing well. Next sector, right? It's doing well. Why is it doing well? Well, remember the Jetsons when they would go to the wall and push a button and get what they wanted? Well, now we do that with our behinds on our couches, right? We just want it, and again, industrial is going to keep booming. Opportunity there, really building more, developing more industrial. So I think that's the opportunity there. I think the next sector that's really doing well are single tenant net lease properties. You know, properties with one tenant, they're high credit, they're typically long-term leased. We're seeing cap rates compress on those properties with really long-term leases. And if you're dealing with people that don't talk about cap rates a lot, I'll just like to remind them that look, if you paid all cash for a property, it's like your first year's cash on cash return. So we're seeing those properties actually go up in value whether they're long-term leased. And so the opportunities there may be, if you're looking for a higher return, is to look at some properties with shorter leases. When those leases get below 5 years, those values start coming down on those properties. Then you have the risk of renewal and those sorts of things. Well, one tip I would give you, there's some software now that tracks all of us on our smartphones. And so if you have a tenant at a property and you're trying to figure out what's their renewal risk, then you can use this software and how to see how much traffic they're really getting. Maybe they don't report sales, most of them don't. So you don't know how well they're doing in the location. Well, check out this, and if you want a free sample of it, I don't have any reason to promote this, but I just like this software. So if you want a free sample report, just shoot me an email or a text or something, and I'll send you a link and you can get some free reports. So that's an opportunity there on single tenant. You know, the next property type I think I would mention would be office. And I'll start with government leased office and medical office. Seems to be doing really well. We've closed a lot of those transactions during COVID at our shop, and that we're getting cap rates on those that are equal to, or on some of the government leased properties, actually slightly compressed cap rates from pre-COVID, because there's a lot of capital out there looking for opportunities and looking for safe investments. We took out a $41 million deal in Nashville that was medical office, right in the middle of COVID. We got the same cap rate that we would have received on it prior to COVID. Same thing on the government lease properties. Those we're selling, we sold a 400,000 square foot one in Mississippi. The cap rate was probably a little bit lower than it would have been prior to COVID. Now let's go to regular office. And I think that's the sector that people are kind of, hey, what's going on with the regular office market, right? Because so many of these office buildings aren't being utilized. There's been a lot of sublease space come on the market. There's a lot of companies and people suggesting that they don't need office space anymore. And so we are going to have a time frame for regular office that I think there's going to be higher vacancy, some lower values. Then I think it's going to really rebound. And I'll tell you why, and I'll tell you the timing that I believe will happen on increased demand for office space. Reason I think it's going to rebound is, think back at 9/11. they said then that people would never go in these high rises in Manhattan again. They'd never want to be there again. They did. Okay? You look at these surveys. 80% of employees say they're really productive at home. Yeah, 79% of those are lying. They want to be at home, right? Petting the dog and having the refrigerator close by in their PJs, right? So, I think that companies are going to realize. How many of you have been really active during COVID? If you've been really active, you're dealing with companies and businesses, and you've probably realized what we've realized is the companies that have a lot of work from home people, it's slower to do business with them. It's slower to get reactions. It's just more difficult to do business with them. So guess what? You're going to do business with people who are providing great service and are quick to respond, and they can collaborate with the people they work with and move quickly to service your needs, right? So companies are going to realize as the economy starts coming back, when companies are not afraid anymore to have their people together, they're going to start realizing that productivity is way down. And think about, I won't name all 10, but think about these issues for businesses in the office environment, but not having people together. Recruiting. Have you tried recruiting people during this time? Onboarding. How do you do that? How would you like to recruit someone and say, you're going to love our people, you're going to love our culture, but you're never going to see them. You're going to be at home by yourself. And then the collaboration, right? The creativity, the production. There's going to be a lot of challenges for companies, and they're going to see it in their bottom lines, and they're going to want people in their offices. So they're going to want the offices to attract the people. They're probably going to want more square footage per person. We've had this big push over the last several years, especially when employment was very strong. And it's kind of started when employment was low and people were really happy to get a job. We started cramming more people in less space, right? And all of a sudden you're down to 100 square foot per person. You're sharing space that someone just left from. How many of you would like to walk in a space that someone just left because they didn't feel good and you're walking in to use the same hoteling desk, right? Or how would you like to be on a bench with 100 square feet per person? I didn't like it before. And when people would be on my show talking about how great this was, I'm like, all right, well, would you want to do that? Would you want to be elbow to elbow with people? When they sneeze, you're like, ugh. So I think you're going to see the office market rebound. I think it's going to take between 18 months and 36 months for some of these high-rise buildings, especially in these cities where there's a lot of people commuting and mass transit. Because you think about getting on mass transit and then getting in an elevator, going up in a building. And we're seeing it in the buildings that we're selling now. So the buildings that are high-rises, like this one, you go and there's probably less people working in these buildings. Sometimes 80% of the people aren't here. But we've been selling some smaller buildings in the suburbs, Douglasville, Roswell, Marietta, and I went on a walkthrough of several buildings 2 days ago. I would say 85% of the employees and companies were open and doing business. But these were smaller buildings, 2 stories max, and they have their own entrances. They don't have to be around a lot of other people that they don't know at these other businesses, right? So those offices seem to be doing well. So where are some opportunities in office? I think there's a lot of opportunities in office because of this time period of 18 to 36 months where there's more vacancy. So if you run a business, or your clients run a business, leasing office space right now, you can really get some good deals on subleases, on new leases. The incentives are great. You can really get a good deal. If you even have a lease and you still have some term on it, going to your landlord and suggesting, hey, would it help you with your lender, with your value, and help you sleep well at night if I extended my lease? So it's a good time to think about maybe going to your landlord and getting some incentives to extend your lease. Another opportunity in the office world is to owner-occupy property, to buy a property. We just put a property on the market the other day, I think it's about 18,000 square feet. It's in a good market area, and I saw the price per square foot. I'm like, wow, that's a good opportunity for a user that could use that space. take advantage of the lower prices in office right now, take advantage of the lower interest rates right now, and maybe look at buying properties. Now, I like to tell companies, just make sure you're not buying a property for your business just to be buying property. You make sure it works for your business, because you can always just buy an income property. But buying for your business can be a great way to do it. You know you're going to pay the rent, right? And you can get really good financing. The lenders in here, raise your hand. It's owner-occupant, strong business. You love that, right? Yeah, come on in. We got some money for you, right? At really low rates. Another opportunity in office, and another opportunity in single tenant net lease that we talked about is really hot, are sale-leasebacks, where businesses own their own buildings, and they're looking at this opportunity where single tenant net lease properties on long-term leases have increased in value, and there's a lot of demand. So a lot of companies are looking at sale-leasebacks, where they control the property on a very long-term lease, and they sell the property to an investor. We're seeing some really low cap rates. We've got a couple 1031 buyers that are spending, one has to put out $22 million, another one $8 million, and we're looking at all these single tenant net lease properties. The cap rates are really low. There's a bank we just put under LOI yesterday at a 4% cap rate. And we're representing the client, the buyer. She loves it. We've showed her everything out there and the returns on everything. She wants that safety. She wants to drive by that corner and go, that's mine, and I don't have to worry about it, right? So there's a lot of investors who like single tenant net lease investment properties. You sell the property long-term on a long-term lease and you control it. So there's a couple opportunities in office. All right, what would be the next sector?
Retail.
Doing as well. Retail. So obviously retail has been in the tank. You know, some of these sectors I don't have to talk much about. You all know the problems with retail. Now some retail is doing well. So, you know, on all these sectors and all these property types, you really do have to look at the individual property, the tenant, very closely, not just bulk of these property types, obviously. So some retail is doing well. Here's the thing about retail that I think is really interesting. It's usually good real estate, right? It's usually really good property. So all of you are probably doing some sort of transaction that involves what property that was retail that now is being redeveloped, right? For last mile, or for hotel, or for multifamily, or for mixed use. So think about retail. There's some real good opportunities for changing use with the existing buildings and transforming those, and also just redeveloping them. So I think the opportunity in retail is in redevelopment. And then to talk about the hotel industry, the hotel industry, everybody knows, is in the tank. The opportunities there, really, if you're in the hotel business, are buying hotels. Now, there's been a law that there's not been a lot of hotels to buy. A lot of lenders and hotel companies kind of kicking the can down the road to see when the market's going to come back. The hotel industry, when's it going to come back? Well, depends on the economy, right, the vaccines. But we have a hotel division. We have a division at every specialty. And then on my show, I don't know if you guys, all of you don't know me, but I do a national show called America's Commercial Real Estate Show, and I've been doing it for 10 years. And I get the opportunity to interview the top analysts and economists on commercial real estate in the U.S. And they all love being on my show. And I get great information out of it. And the show is absolutely free, and it's on your phone. There's a podcast app on your phone. You can tell, hey, listen to America's Commercial Real Estate Show, and it's free. There's a new show every week. So I get to interview and get the information from these guys and ladies who are really smart, PhDs, real estate economists, and all they have to do all day is study this. You know, like us, we're also making a living, right? So I get to hear that. And then from having brokers in my shop, we have 30 brokers in every specialty. We do business in 9 Southeast states. I get to touch on these different property types, right? So in the hotel world, we're expecting that there's going to be trouble there from a year to 3 years. And of course, the biggest trouble is in these convention towns and the downtowns. Some of the hotels that are doing better are the drive-to markets, you know, where we would drive to from here, let's say, to enjoy a weekend, right? Some of those hotels are doing okay. So the opportunity in hotels is really, like I said, is buying hotels. We talked about opportunities in office. leasing space, buying buildings. Another way to look at office is really the difference between suburban and CBD. And there's probably going to be some opportunities in the high rise, in the central business districts, once some of that becomes more available. We're going to test the regular office market today. We're going to take out an $8.5 million multi-tenant regular office deal in West Palm Beach, Florida. So it'll be interesting to see when investors in the regular office market kind of look at a deal today. It might be crickets. You know, I don't know. This particular building is 100% occupied and had full collections through COVID. So we thought it was probably a good time to take it out. But you know, who knows what we'll see. So that's a little bit about office. We talked about medical office. We talked about retail.
We'll let Todd hit on the senior.
Yeah, senior. And I'll let him touch on senior, but obviously they had trouble leasing right now and doing the tours. But I think the future of that sector is off the charts, incredible. I mean, if you think about the age group that go into assisted living, think about people in the 60s. They did a lot of drugs in the 60s. They're going to need some help, all right?
Why med control is such a thing.
Yeah. That business is going to really boom. So I look forward to hearing that. All right, so that's probably my 15 minutes of fame today. Thank you for letting me talk today.